Welcome back to my morning report. Charles Perez on Wednesday, the 4th of May, with me, Rich Pro Market Analyst at Antec Markets, looking at Eurodollar now. And we had this breakout on Eurodollar, didn't we? Above that key resistance, 1465. That is the long-term resistance. So it's been in place on this chart for about 16 months. A couple of breaks through it, just failed really. I mean, look at that one actually in August. That was a sharp spike higher, but then you got the sharp correction again, and you got the failed one back in October as well. Is this next one going to be a failure as well? A high of yesterday at 1614, but look at that candle. That is a big shooting star. I mean, I'm going to call it a shooting star. Theoretically, you probably want a smaller body on the candle, but I think that's a very much of a corrective signal. And not only that, we've had further downside today. We're about 20-25 ticks down. Look at the RSI hitting 70 again and falling away. Stochastics beginning to cross lower. This looks like this could well be a failed near-term move anyway. Whether it's a failed long-term move remains to be seen, but near-term it's correcting back into that old trading band. And the just in the last sort of few minutes, really, the decline is accelerating a little bit lower. You've had the Eurozone PMIs come out. They do a very slight miss on the services, but broadly in line with expectation on the Eurozone data. But it certainly looks as though it's going to come back and test that 1465 breakout. You've got this sort of pivot around sort of 1445, 1450 area on the near-term chart. Very near-term pivot. But that obviously coincides pretty much with the breakout 1465. So you'd say that it's sort of 20 pips worth of support, and if you lost 20 pips worth of, if you lost that support 1445, you're sort of back at 1395, which is this breakout, near-term breakout. Old support, sorry, old resistance becomes new support. So 1395. Is that level there, and it looks like it could well be coming back towards it. You're sort of more negatively configured near term on the hourly RSI, having previously sort of found support around sort of 40-45. That's now becoming a basis of resistance. MACD lines and more negatively configured as well, although slightly not slightly sort of consolidating, but that could actually turn out to be a bear kiss, which would even be even worse. So generally speaking, it looks like the near-term outlook is for a correction actually now on the euro, and I think we could see further slide back into this trading range. That old pivot which came in at 1330, 1340 could well be where we sort of drop back to. So it seems as though the correction mode is setting in for the euro near term. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.